Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special report on $84.5 billion. Now that's a big chunk of money and it's important because it's the amount that our banks have to refinance every 90 days in foreign debt. And that means every 90 days our banks go out into the international credit markets and say to their lenders, can we please keep that $84.5 billion? Because our banks have lent it to us in the form of mortgages, and they're in no position to hand that money over if it's demanded immediately. Now, of course, that's not how the system works. Our foreign lenders are not going to come to us and say, give me back all the money now. They will probably say, give us back a little bit, and we'll put up the interest rate on the stuff you've got. And that's why there is pressure up on fixed mortgages in New Zealand, if it wasn't for the Reserve Bank cutting the official cash rate. This is important because it's worth stepping back in time to where we were 5 years ago. Back in June 2003, our house price, the median house price, was $210,000. Back then, New Zealanders owed about $70 billion in mortgages and our foreign debt stood at about $136 billion. Back in 2003. In the following 5 years, through the housing boom, we borrowed around about $70 billion in foreign debt, and we pumped that pretty much straight into house prices through higher house prices. House price now has risen to about $340,000, and the total net value of all our houses has risen by about $300 billion to $616 billion. Sounds like a good deal, but what it's done is made us vulnerable to a credit crunch, and that's what we're seeing now internationally. And that $84.5 billion could prove to be a problem if interbank markets freeze up completely and we can't refinance that easily or cheaply. The end result? It may mean our banks will have to come to us and ask us potentially for a little bit of that money back. More likely though, they'll simply stop lending to us easily. And those people who are a little bit riskier, perhaps borrowing more than 80% of the home loan, they'll find it very difficult in the future. I'm Bernard Hickey. That was a special report on the $84.5 billion of foreign debt that has to be rolled over every 90 days.